Dear students, welcome back to your education channel Learn and Educate, where we were studying the basics of Foreign Exchange Management Act, under which the topic is Capital Account Transactions. Section 2, Clause E defines capital account transactions. Capital account transactions means transactions which alters the assets or liability. The liabilities include the contingent liabilities outside India of a person resident in India. The first part is this, and the second part is capital account transactions means a transaction which alters the assets or liability in India of a person resident outside India, which means that the assets or liabilities which includes the contingent liability outside India of a person resident in India is altered, or the transactions which alter the asset or liability in India, situated in India, of a person who is resident outside India, and includes the transactions referred to in section 6 subsection 3. Capital account transaction includes the transactions referred to in section 6 subsection 3. Hence, a reference to section 6 section 6 subsection 2 is the Reserve Bank may, in consultation with the central bank, specify a any class or classes of capital account transactions which are permissible, the limit up to which the foreign exchange shall be admissible for such transactions. In consultation with the RBI, the central government will specify any class or class of transactions of capital account which are permissible, and the limit up to which the foreign exchange shall be admissible for such transactions. C. Any conditions which may be placed on such transactions, provided that the Reserve Bank shall not impose any restrictions on the withdrawal or of foreign exchange, but it provides that the Reserve Bank shall not impose any restrictions on the withdrawal of foreign exchange for payment due on account of amortization of loans or not depreciation of direct investments in the ordinary course of business, which means that in the ordinary course of business, the payments due for the amortization of a loan or not for depreciation of a direct investments or depreciation of direct investments is not involved, and where payment is due on account of amortization of loan at that point of time in the ordinary course of business, RBI shall not impose any restrictions on the withdrawal of foreign exchange. The capital account transaction includes the international transaction of ownership. It also it means that the transaction of transfer of ownership. For example, when a company, Indian company, acquires a foreign trademark, is an example of capital account transactions, which means that a resident in India having a transactions which alters its liabilities, its assets. International debt forgiveness. International debt forgiveness is a capital account transaction, sir, which means example liabilities include contingent liabilities. Similar way, when an Indian company acquires Indian oil company acquires a acquisition of drilling rights of a overseas location, or when a foreign company, example a US oil company, acquires drilling rights to an overseas location for it but in India, then it also acquires alters the assets or liability of such a foreign resident. The capital account of balance of payment records public and private investments and lending activities. It is the net change in the foreign ownership of domestic assets. As per the provisions of Section 6, all the capital account transactions are prohibited unless specifically permitted, which states that, which means there is a permissible capital account transactions. The permissible capital account transactions are defined under the following categories. First, that is person resident in India. Second, for a person resident outside India. When the assets are altered, the liabilities are altered of a person who's resident in India. Category 1, permissible capital account transactions for a person resident in India. Investments by a person resident in India. The transactions must be within the limit specified in the Foreign Exchange Management Transfer or Issue of the Foreign Security by a person resident in India Regulations 2001. For example, a remittance of a US dollar 1 billion or its equivalent in a financial year is allowed towards investments in a foreign securities, subject to a stipulation which requires that the remittance should not exceed 400% of the net worth as per the last audited balance sheet of the Indian party. The B. A is investments by person resident in India in foreign securities. B. Under the category of permissible capital account transaction for person resident in India. B is foreign currency loans raised in India and abroad by a person resident in India. The transactions must be within the limits specified in the Foreign Exchange Management Borrowings or Lending in Foreign Exchange Regulation 2000. The limits of foreign currency loans is specified in the two broad heads on the basis of maturity period and on the basis of eligibility of borrowers. On the basis of maturity period, it is foreign currency loans which must be raised under the different track depending upon the maturity period. Under track 1 and track 3, the said loans shall be up to a US dollar 50 million or its equivalent may be raised if the average maturity period is 3 years. In the event when the average maturity period is 5 years, the limit of borrowing may be enhanced, may be increased to an indefinite amount. However, relaxation is granted to certain class of borrowers under track 2 if the average maturity period is 10 years. Unrestricted foreign currency loans may be raised on the basis of eligibility of borrowers. The limit of foreign currency loans differs with the category of borrowers. On the basis of the eligibility of borrower, the limit of foreign currency loans differs with the category of borrowers. For infrastructure capital company, core investments companies and certain non-banking financial companies may raise up to US dollars 750 million or its equivalent. When software development sector and entities engaged in the microfinancial activities may raise up to 200 million or US dollar 100 million or its equivalent. The transfer of foreign immovable property outside India by person resident in India. Such transactions shall be governed by the provisions contained in the Foreign Exchange Management Acquisition and Transfer of the Immovable Property Outside India Regulation 2015. D. Guarantee issued by a person resident in India in favor of a person resident outside India. Export, import, and holding of currency notes. For export of currency notes, for import of currency notes. For export of currency notes, a person resident in India may take outside India, other than the Nepal and Bhutan, Indian currency rupees up to an amount of rupees 25,000 per person. A person resident in India may take or send outside India, other than this country of Nepal and Bhutan, com- commemorative coins of up to two coins, up to two each. For import of currency notes, a person resident in India who had gone out of India on a temporary visit may bring currency notes of up India up to an amount of 25,000 per person at the time of his return, but from a place other than the Nepal and Bhutan. Aggregate value of foreign exchange in the form of a currency notes, a bank notes, or traveler's check brought in India by any person in aggregate at each time is up to 10,000 US dollars. Export and import of currency to and from the Nepal and Bhutan.